Hello everybody and welcome to this webinar today. This webinar is brought to you by S2SE4 and the title is The Nordic Energy Market Summer Outlook. So we have a lot of interesting material for you here today, covering both the climate issues and also what it means for market participants in the region. I'm Richard Sverrisson. I'm the Editor-in-Chief Europe at Montel. I also moderate several of our conferences across Europe. Please remember that this is recorded, so I'm sure you'll gain an access to the recording after we finished. And please send any questions to the chat function on the webinar, GoToWebinar screen that you'll see there in the top left-hand corner, or wherever you have it. We will have three presentations, and I'd like you to, any questions, please, we'll save for the end. But I think that's enough from me. Let's get on to the experts here. So I think let's start with Jana Sillmann, who is a research director at CICERO, and she has a strong experience in leading interdisciplinary projects. So Jana, please, over to you.
Yeah, thank you very much, Richard. I will present today some examples from the S2S4E project on how energy market players can benefit from using seasonal forecasts. I'm from CICERO, and I have a project team that worked with me on that presentation. Especially for the renewable energy industry, it is important to anticipate climate conditions to make informed decisions. Anomalous weather conditions or anomalous seasons, such as very hot winters, very cold winters and very hot summers, can disrupt renewable energy production. And we need information ahead of time, for instance, on subseasonal to seasonal scales on these weather conditions, tailored to the stakeholders' needs to help the renewable energy industry to prepare for such extremes. What you see here is an example of a weather forecast provided by the Meteorological Institute in Norway, here for Oslo. And you can see the weather forecast provides information on hourly timescales up to 3 to 10 days ahead of time for temperature, precipitation, and wind on very high resolution spatial scale. And energy companies use this weather forecast information, but also they use the climatology produced from weather variables over a long time, like for instance 30 years of weather produces a weather climatology that is often used by energy companies to base their decisions on about upcoming seasons, months or weeks. In addition to weather forecast and the climatology from the weather that it was experienced over many years, we can also provide now subseasonal to seasonal forecast, as we do in the S2S4E projects, which gives you climate predictions for 1 week up to 7 months ahead, with a little less spatial resolution than the weather forecast, but longer time range. So for what decisions is that needed in the energy industry? We have 3 main categories: maintenance, like for instance maintenance planning for solar and wind turbines, then also financial decisions related to, for instance, trading and hedging, and also decisions related to operations, for instance, water resource management, network planning, or safety and prevention measures. And all these decisions need input from weather forecast or climatology related to temperature, which is the most used weather variable, precipitation, but also wind speed for wind energy, solar radiations for solar panels, and also snow cover for hydro production. And as you can see, for instance, for these different categories of decisions, we have different time scales that the information is needed. For instance, financial decisions related to trading, we need hours or several months ahead of time. And these decisions depend very much on good, reliable forecast of the weather conditions, but sometimes there are very anomalous seasons. Like for instance, this case study, which we looked at in the S2S4E project, a severe cold spell in France and Germany in 2017, where you can see here for the week 3 in January 2017, we had very anomalous surface temperatures, up to 3 degrees lower than the climatology. And that also this season was accompanied by low wind conditions and low precipitation. So these cold conditions were also leading to, of course, a high energy demand for heating. And so the electricity prices for that period were really high. And you can also see on this right graph that we have the climatology values that we get from the climatological averages, average over 30 years, for instance. And we have the actual climate observed daily and weekly mean indicated by the black line, which was way below the climatology. So to be prepared for such events, we need good seasonal and subseasonal forecast. But also the producers and traders of electricity, they use financial instruments such as power futures to hedge financial risk. And these power futures or financial instruments, they also depend very heavily on the predictability of weather. So this is now an analysis from this future settlement prices during this severe cold spell period in 2017 for France and Germany. And you see the future power settlement prices that were estimated ahead of time, ahead of the week 3, where the actual trading happened. And this is the blue line. And then the actual price, final price in the week when it was traded is the red line. And the deviation from the final price is in gray shading. And you can see that ahead of the week 3 in France, which the week 3 started on 16th of January, in France, the prices were overestimated, so they overestimated the demand, whereas in Germany, on the right panel, you see that the event or the high demand wasn't even anticipated, so they underestimated the demand. So both countries, and in both countries, the electricity industry would have benefited from better seasonal or subseasonal forecast to better estimate the final prices or the power settlement futures to be closer to the final price. So that shows you that the both demand as well as supply can be severely affected by weather and climate variability, and not just in the winter or any other seasons, but also in the summer, which shows you this picture from the summer in 2018, which was very, very hot and dry and brought the Norwegian hydropower sector in big struggle. Because they weren't prepared for this low precipitation event, And so the electricity prices were really, really high. And if they had better forecast of that summer drought and heat, then they could have better prepared their hydropower production. So that shows us that all seasons matter. Subseasonal to seasonal forecast can help, but subseasonal to seasonal forecast is not always as skillful as needed, especially in summertime. But renewable energy becomes more and more important as we move to the transition to a low carbon society. So there's a growing interest among various stakeholders in using those subseasonal to seasonal forecasts to support their decision making. But it is a process, both in the development of the seasonal to subseasonal to seasonal forecast, but also in building trust and confidence in the stakeholders to use these kind of forecasts, because decision makers tend to be risk averse. So we need to be very careful in communicating the reliability and uncertainties related to these forecasts, and helping us is the strong collaboration between the scientists and the stakeholders to produce products that are useful for the energy companies, so that they can understand and appreciate the subseasonal to seasonal forecasts. And that's what we do in the S2S4E project, to improve both the forecast but also the trust and understanding of the stakeholders. And this provides opportunities for improving the competitiveness of renewables with the fossil fuel energy sources, and making renewable energies more resilient to changes in climate. And
Jana?
with that, I end my presentation.
Thank you very much, Jana. Excellent. That was very clear. We'll move on to our next speaker straight away. As I said, I'd like any questions at the end. So hopefully there'll be plenty of questions for Jana at the end. So our next speaker is Nathalie Schaller, who's a climatologist who's working at CICERO. And you, Nathalie, you work on the climate impacts of extreme events. I understand. So please tell us more about what we can expect in Northern Europe for the next 3 months. Thank you.
Okay, so hi everyone. Yes, I will provide a short outlook for Northern Europe for the next 3 months, and I will also show you a bit how what you can use in the decision support tool that was developed within the S2S4E project. Just a quick reminder of how the year has been going on so far in meteorological point of view. So we had a relatively mild winter for the whole of Europe, and followed by a bit warmer than usual March and April. But then the month of May was cooler than usual, especially in Scandinavia, as you can see on the map on the right. So this has led to the fact that the snow pack has melted a bit later than it usually does, and I think Gabriele will go to that a bit more details. But so the month of May has been quite cool. June has started also on the cool side. So in the S2S4E project, decision support tool, or the DST, has been developed. You can see here the link where you can have a look at it. Also just follow the S2S4E website. The model that is behind this DST is the CICERO model from ECMWF. And on the S2S4E website, you can also find monthly forecast outlooks. So I have a few figures like this one that are taken from this monthly forecast outlook. And afterwards, I will show you screenshots from the DST, how you can look at the different data that have been prepared. So for the seasonal outlook from the ECMWF model, you can see maps that's also taken from the DST for June, July, and August. There is a little summary below those figures to tell you what the main outcome are from this forecast. So for June, for France and Italy, there is a high probability to have below normal conditions in terms of temperature. For July and August, it's more toward Western Europe that we expect above normal temperatures. But if you look at Scandinavia, there is no strong signal. So we expect more of a normal or climatological summer. And this is now a screenshot from the DST, and I hope you can see my mouse maybe. So there are different things you can choose when you look at this DST. On the upper panel, you can choose the different forecast and the forecast windows you want to look at. So here for the next 4 weeks, this is taking the forecast, the subseasonal forecast from that was produced on the 5th of June. For the next 3 months, this is the forecast that was issued in May. And the next one will arrive in the next few days. Then you can, on the left side, you can choose the variable. So here, this is looking at the essential climate variables, and I selected temperature. There are other things you can choose from the skill level and the probability threshold. So skill level of 0 and a probability threshold of 50% is what we recommend to use. But you can also increase the skill level, and then you will see that some of the dots disappear because they do not meet the skill requirement. Then you have the map with the different grid points from the model. And if you click on those dots, I choose here one from around Oslo, you can have more detail about the forecast. So the ECMWF season 5 model, CIS5 model, has 51 ensemble members. And this you can see here on the distribution. This is the distribution over these 51 ensemble members. And there is some information about these screens. And you can see that 35% of the ensemble members are in the upper tercile, so warmer conditions than climatology. And the skill is 4%, which is fair. So it's not very big, but it's better than climatology. So this is from one model. You can also look at the climate data store to have all 6 current seasonal forecast models. So this is the CIS5 model that is in the DST on the upper right here. So in this, the 6 model, the common feature for Scandinavia is that it's mostly appears white, so no strong signal for the coming summer. And now we can also look at the other variables, essential climate variables, precipitation and wind. This is also taken from this monthly outlook for June, July, and August. And similarly for Scandinavia, there is no strong signal. There is some more drying conditions over Eastern Europe, and a bit above normal wind speeds in those regions as well. Maybe for August, there is a bit below normal wind speeds forecasted in the Baltic countries, but overall, we would just say that there is not much of a signal for any of those essential variables for Scandinavia for the summer. There are other variables as well that you can look at in the DST. So for example, if you select wind energy instead of essential climate variables, you can look at wind speed on a grid point basis, like I showed before for temperature, but you can also look at those variables on a country level. So just to illustrate that, I chose that for the month of August. And I selected Sweden as a country. And again, you have more information about the 51 ensemble members and the distribution on the right-hand side. And so 41% of the ensemble members have below average wind speed, for example. You can also select hydropower as an energy sector in those variables, and there are different variables that might be of interest. Here, this is the snow max anomaly, and here I selected the subseasonal forecast and week 3. And here you can see it on a catchment basis, and I selected one catchment also just by chance here. And again, you have more information. And here, basically, this tells you, this is not the, I don't think it's the 51 ensemble members, but it basically tells you that for in the coming weeks, you will still have above average snow depth conditions over those catchments here in Norway due to the fact that we had a very cool May and a lot of snow during the winter. And you can also look at inflow anomaly from this hydropower category. Now I just changed also the week 4, but week 3 looks similar. And in most of those catchments, you also have a strong signal for above average inflow, mostly due to this snow cover that is still quite present. So these are a few things that you can have a look at in this decision support tool. And so that was it from my side. Unfortunately, not much signal for the coming summer in the Northern Europe.
Thank you very much, Nathalie. Very interesting. So I can. It sounds like it's going to be a lot of snow melt in the weeks and months to come, certainly in Norway. But with these very strong snow levels. But thank you very much to Jana and Nathalie. I think if we can switch now to you, Gabriele, and think what does this mean for the power market? What does this mean for people in the energy companies? So please, Gabriele Martinelli. Gabriele is currently lead quantitative analyst for the European power market at Refinitiv. So Gabriele, it's all yours.
Yes, okay. Yes, thank you for the invitation. So I'm gonna start to present from a quick review about what has happened during the past winter. Okay, so probably the number that you should focus mostly on is this hydro balance. The hydro balance is probably you are familiar with that. Is calculated as the. Oh, wait a sec. I'm moving that window out. Move this one on the side. Is calculated as the deviation from normal of the actual reservoir content plus the snow and soil water content, basically. And so during the years, you see how the blue line has moved. Now we are coming from a situation where the hydro balance was extreme. It reached plus 37 TVH, which is something that you see historically has not been reached so much, and this has pushed the price extremely low during this past spring and still during this summer. So we can see how the hydro balance is about now. So the hydro balance now went from 0 to plus 37 TVH, as I said, in less than 50 days. This was very extreme during January and February month. And but later on, during the past 2 months, actually it has declined quite substantially. From so the current forecast, the one from this morning, is actually hydro balance only at plus 10 TVH, and so I had to remake this slide actually this morning because during the weekend it was so dry weather forecast coming in that it would have been not right not to include that here. And so you can ask yourself, okay, how has the price followed this extreme development in actually both directions? And what do we see is the following thing. So here I'm plotting the development of the Q3 Nordic contract. So the contract that basically starts in July and goes over to September. And so you can see in the blue line how the Nord Pool close of this contract went. So it went from around 30 euro in early January, end of December, basically, down to extremely low values, around 7 to 8 euros in April. And so it has basically fallen like dramatically following the rapid increase in the hydro balance. But then we can see that after April, it has not come up to the level where we are, where we would expect something like that, following the worsening hydro balance. So we have had hydro balance going from 37 TVH to 15 TVH, and the price basically not reacting to that. And so this was coming as a surprise in a way to many market participants and to many analysts, which in a way kept asking to us, okay, but what is really going on? And so here I'm trying to present some analysis about what we believe is really going on there and why the price has not yet recovered, even if in terms of hydro balance now we are very much closer to a normal situation. So the reason is that so there is 4 reasons that I'm going to list here. So the first one is that the reservoirs, the Nordic reservoir, are expected to remain full. Okay, so the Nordic reservoirs are not full right now, obviously, because now we are at the beginning of the melting season. But basically, we have our model which will forecast how the reservoir will be in week 42. Week 42 is traditionally the top, the maximum of the reservoir. So the week 42 is mid-October basically, and we are still forecasting very full reservoir for that date. So you can see that the forecast for that reservoir filling has increased over with increasing hydro balance, and now that has not fallen down. Okay, so you can say that in a way the water that accumulated during the winter is so much that even if the hydro balance now is worse, then that has not changed the main fundamentals. So basically the reservoir are still expected to reach an extreme point in mid-October. So something that was basically reached only in 2015, if you see in the chart for the past 10 years here. But even in 2015, it didn't went to 95%, it went to around 90%. So we are expecting even more than that. So around that level, around the level of the green line, or even more. So the second reason is that, so what is going on then? How come the water, the hydro balance is worsening and the reservoir are still full? And so what has gone down recently is the risk of a really dramatic spillage. So spillage is also an outcome of our price model. So we forecast how much water we expect to get lost, especially from the reservoir, from the water reservoir in the Nordics. And so you can see that in the models of in the runs of our model, we had an extreme spillage risk up to, you can say, 13, 14 TVH during the month of April. And then now recently, since the hydro balance is going drier and drier, actually you are basically saying that you are going to go towards a more controlled snow melting. So there's going to be still spillage. So we are still at the level of total around 7 TVH at the moment, the last run. And we are seeing these nowadays in northern Norway and many other regions, also in Sweden. But actually, the risk for a massive spillage has decreased a lot. So if we didn't have the last, say, month of dry forecast, we would observe a much more dramatic spillage than we are observing right now. So we can call it still dramatic, but I mean, you can see the level where we are coming from. So we're coming from a risk which was really massive. So the third risk, the third factor is obviously the COVID-19 impact of consumption. So in Refinitiv, we are trying to follow it in real time, providing you day by day with the COVID impact to demand figures in basically in weekly resolution for all countries in Europe. You can see that even if the Nordics have not had the dramatic decrease that we have seen in other countries, in Italy or France or Spain, still for the past 2-3 weeks, we can see that we are at around with a net COVID impact of around 5%. Let's say it oscillates from 4 in Norway to 6 to 7 in Sweden. essentially. And actually, getting these figures from the actuals only is not so easy, because we can see that we are coming from a very cold April and May, as Nathalie had said. And so if you only look at the actuals, the actual consumption actually was not so far from the normal consumption there. But actually, if you remove the effect of the very cold weather we have seen during May, you can see that actually the delta there is covered essentially in the same proportion by the COVID impact. So you can say that was also another important factor to look for during this past winter. And obviously the fourth reason is now the fact that given the prices that are so low, we are actually exporting a lot more to Germany and to the continent. So this is really the fourth reason. So you can see in red in this chart the average monthly exchanges in hourly resolution from the Nordics to the entire to the rest of the world, let's say to the continent. And you can say that we have averaged between 3 and 4 gigs during the last month. So it's basically close to full exports, really. So even with low prices in Germany, so that are a bit pushing the imports in some particular hours during the middle of the day or during weekends, we are still have an increased amount of exports there. And I list on the right some new cables and some new information about plants and cable as we have in our model, and this will further play out in the next months and year, because as you know, they are building a lot of new cables around this region. So what about now the price? So this is where we come from, basically. This is to set the sign. And where are we going now? So we have now a new price model which tries to follow in very much detail what is going on in the Nordics. So we have now inflow forecast in hourly resolution for many of the catchment in Norway and Sweden, following both the temperature and the inflow expected in hourly resolution. This is a new addition we have had from last year, which we believe is very useful for both long-term and short-term traders. And we can see that as Jana was and Nathalie were saying, like we have now snow and soil conditions surplus at around plus 27 TVH still, and this is really the reason for the inflow to remain above normal for basically the entire summer. So basically the snow now will start melting, but if you see now how we expect this for the next 46 days, basically, especially due to the fact that we are going to have quite warm temperature going on for the rest of June, essentially, we are going to have above normal inflow for the basically entire period. And then on top of that, we are expecting a bit more wetter July, and so this will also add to the picture, basically. So our models for the price forecast in the Nordics is a fundamental model, optimal dispatch. So basically, it optimizes the use of water versus the other constraints, which are the fuel price, obviously, the plant variabilities, and the exchange capacities. And so as an output, we get all the output related to water that I was showing you before. So the expected reservoir levels, the expected spillage, the expected production, and also the price. So when it comes to the price, so now we are in a special conditions because we have also this consumption effect. And so in our run that I'm going to present now, for the last run, we have reduced consumption by around 11% compared to a normal year. For now, the weeks from next one to end of Q3, and 5% also for Q4 and Q1. And this is mostly to account for a GDP crisis, basically, and so it's mostly related to macro effect and not to the real effect that we see only right now. And they might be a bit too aggressive because, as I was saying before, we currently see around 5% impact on demand, but we believe is realistic because it potentially compensates for other bullish factors in the model. So now what I'm going to present now is the run from last Thursday, which is the last run I had available when making this presentation. Actually, the picture has changed quite dramatically during the weekend, as I said. So, but at the time we were like bullish for the front month, and so essentially the market was trading at around €5 for the front month. We had the SDP mean of around 7.6 euro. And that's because, as I was saying, still the risk, the downside risk is high, but we are going towards a more controlled melting, lower inflow pressure. So the reasons that I explain now are really explaining this table right now. So we are bullish for the front month, neutral for the front quarter. So we believe that the 9.5 euro it was trading on Thursday it was a realistic number. Now, obviously, the situation has worsened a lot because the hydro balance went down 5 TVH during the weekend, and so now they are trading around 13, 14 euro. And so obviously, I'm very curious to see what will be our next run published tomorrow. And we are actually bearish for Q4 20 and Q1 21, if you want, because of the reservoirs which are still expected to reach full level. So there is really, it takes a lot of time before you remove the entire downward pressure that you have from this extreme filling of the reservoir. And you have also consumption assumptions, so the general macroeconomics, which is quite bearish. So obviously the demand assumptions, the reduced demand in Germany and so on, these are all factors that we have in our model and that are playing towards a bearish situation for the end of the month. So basically we have 3 different views over different time periods because of the reasons I was basically just mentioning. We have run another scenarios where we have reduced the demand a bit less from the respect to the base case, so not 11%, but only 5%. And this result with a Q3 price which is above the one from the market, so and above our base run, so 1.5 euro above essentially, and also above prices for all the summer months. So this we believe is a bit more realistic because this is more in line with what we are seeing actually right now. And I want just to close. We got a new seasonal forecast on the 5th of June from the European Center for Weather Forecast. The EC forecast, the seasonal forecast is a bit warmer and wetter than the normal for Q3 and for the autumn. And so this has potentially also downwards impact. So this is something we need to look for. So and this connect to the other part of the presentations, the other 2 presentations, because getting a realistic seasonal forecast is essentially extremely important when you need to price these forward contracts, basically. And so since the title of the general session was weather and prices, I thought to close by basically summarizing a bit what we are seeing. So obviously the weather impact on the Nordic spot prices is massive and is basically hydro-driven, water-driven at the macro level. But I want to show you another slide, which I think is quite interesting, that at the micro level, the wind is becoming the most relevant factor for spot formation. So having also a wind forecast is a good wind forecast is extremely important. So you see on the left-hand side how the delta or the spot day on day versus the delta of the wind day on day is plotting right now in 2020, in Q1 2020 against Q1 2016. So in Q1, basically 2016, there was basically no effect. So the wind could grow or lower, and you basically saw virtually no effect on the spot. Now, only 4 years later, the wind is the most relevant factor for spot formation in the intraday and day ahead market. And so temperature and hydro balance obviously remain the most relevant factor at the macro scale, but really the weather is playing an even larger role, if you want, for the Nordic, for the formation of the Nordic price. Yes. Thanks for having me. I think I went a bit longer, but yeah. So I summarize here some conclusion. Thank you very much for having me.
Thank you very much indeed, Gabriele. I'm not sure aware, but you also share your name with a very fine football player who plays for Arsenal Football Club in London. But that's a by the by. But I thought when we go on to, I'd like to go on to more talking about the weather and the prices with my colleague Olav here. But to summarize and bring together what you were saying, Gabriele, and also some of the impact from the longer seasonal weather forecasts. So really, I'd like to, we're trying to observe social distancing here, me and my colleague Olav. So I will shift the camera to him, and I will move to the side. So you may hear my voice in the background, and then I'll put the questions to Olav. Just 1 second, just a technical minor break here. So welcome to you, Olav.
Yes, thank you.
Olav, you're the chief editor of the Nordic region here at Montel, and you're going to talk us through some of the things that have been happening in the market recently. It's been highlighted that these prices are at record lows, and so the weather is having a dramatic effect. What are you hearing in the market? How long will these low prices last?
I think the situation has been extreme this year, of course. I've heard so many analysts and traders say they've never seen anything like it, even those that have been in the market since the start of the century, forever in practice. But I think the price, I mean, you set a new record low, below €2 this week in the system price level. And you also had even lower prices in southern Norway, where most of the hydro plants are located. And I think the impact, as we've seen in the previous presentations, could be not as long as they feared a few weeks ago. Just looking at Gabriele's presentation, you see that all these forecasts that came in this morning, very dry for the rest of June. And even today in the market, we saw a 20% price rise on the Q3 contract, which is last just on my screen here. It's priced now at €14.50, and it was below 10 last week. So it's been a very, very high repricing. But I guess that's maybe to expect that you get back to a kind of normal level, but still low level. And then you will, because this was very extreme at this 1-2 euros levels. So it seems that market players will still expect that there will be low prices for the rest of the year. If you compare to, like, for example, in 2019, we had an average price of 40 euros in the market.
Then the climactic situation was very different, was it not?
It was, and it shows how quickly things change. We saw a slide earlier here of this dry hydro reservoir in Norway just 2 summers ago, when everyone was going in short from May till September, and there was hardly any rain. People were talking about a drought. It was extremely high prices, so a fear of very high prices the next winter. But then again, there came a lot of rain in September, and things kind of normalized, and that can happen again. Of course, that's the history of the power market, that you have these cycles, seasonal cycles.
What are market players saying about negative prices, Olav? Is that something that sort of crept in at the start of the year? Is this something that could happen, more and more?
Yeah, I think again, this wind, of course, this increased relevance of wind power in the price setting is probably the reason. I mean, if you look at Denmark, you've had it a lot of times, Germany even more, but then you saw it this year for the first time in Sweden and Finland, I think it was back in March or April, and now you are coming very close also in Norway, and what I've heard from analysts there is that it's not rational, because they can always just choose not to produce if they could just let the water run past their power plants. But then there are issues that are they aware of that in the bidding? Are there some other reasons why they should still continue to produce to prevent flooding and such as things like that? So it could happen, definitely, but I don't think it will happen a lot. It will not be on a large scale as you've seen in some other markets.
Gabriele, maybe you'd like to say a few words on negative prices.
Yes, I share the view from Olav, obviously. So I don't think in Norway this is really an issue. So if it happens, it's because of probably wrong bidding, or because, as Olav said, in a market where you really have no must run or very limited must run, so even with 20 gigs of wind, you should not go. I mean, even so, you are still left with 10 gigs of hydropower, and potentially you can switch that off before producing at negative prices, or let the water run. So I don't think it's a big issue in Norway and Sweden. And I mean, market participants are aware of that, and that's why, I mean, the Nordics are at the moment a very attractive place where to build wind farms, actually, because of the value for the windy hours is higher in Norway than on the continent. So in the continent, there is all this cannibalization, let's say. So here in the Nordics, you are less prone to see that. But it's true that coupled with this extreme high inflow pressure that we have had this winter, this can create problem. But this is more like an extreme situation than the normal, I would say here.
Thank you, Gabriele. We've heard Gabriele mention the wind as well, Olav. How do you see the impact of wind on price formation? How do you see this developing? What are you hearing from market participants in terms of what that will play? I mean, traditionally the price setter in the Nordic region, as one of earlier Gabriele's slide, was the coal-fired plants, but is that changing?
Yeah, it's changing, and it's definitely changing on a spot price level, as was mentioned. I think if you look long term, you don't really have reliable forecasts for how much it will blow in next winter, for example, or next summer. So you need to stick to some other factors there, and then it's the hydro stock reservoirs are hydro stock levels are of course the main price driver still. And then, of course, the fuel costs of running gas-fired plants or coal-fired plants, and the cheapest of them will probably be the main alternative to hydro. So I guess still that the long-term forecast will still use this short-term marginal cost of a thermal power plant, and at the moment it's gas that is more in the money than coal. So that means gas is replacing coal in a way as the most important driver.
Absolutely, Olav. Just a final question. I think when we're talking about the low prices, maybe it's important also to stress that not every region in the Nordics has seen low prices. Is that correct?
Yeah, it may look very depressive from a Norwegian hydropower perspective, because they also have problems with transmission capacity out of this region, to Sweden, to Denmark, to the Netherlands. Also have been some problems recently. But if you are living in Finland, for example, if you are living in the Baltic region, this brighter from a producer's perspective. Maybe that is also one reason why now they are building a lot of wind farms in Finland without subsidies, because they see that the local spot prices there are higher than they are in Sweden and Norway, particularly northern Sweden, where they also have all the hydropower production, and you have the transmission problems to the south of Sweden, which creates problems for future prices. Can create much lower prices than in some other prices zones.
Absolutely. Olav, thank you very much for joining us. I can see some questions ticking in, so I'll take over a bit here with the microphone. I think we have a question here, I think, for you, Gabriele. It's about would you say that the impact of the wind deltas has increased due to the increased penetration of wind power in the electricity markets?
Yes, definitely it has. So I mean, like just if you look at how much wind power was produced in the Nordics in Q1 this year, it was more than 2 times what it was produced in Q1 2018. Okay, so in only 2 years we had more than twice wind produced in the Nordics. So this in a way set the level. So we are in some regions observing a 30% increased capacity, 20 to 30% increased capacity year on year, and this is obviously increasing the volatility of the spot. I mean, not to the level we see in Germany, but to an important level that will make hopefully the Nordic market more attractive also, because more volatility means I mean, volatility is what a lot of traders like, so more volatility means also more opportunity, at least in the short term. So definitely this increased correlation between wind deltas and spot deltas is due to the increased wind penetration. So, but then there is all the problems which Olav mentioned. So the connection, the bottlenecks. So I mean, this is something to be extremely aware. But yes, that's definitely a reason.
Absolutely. Thank you, Gabriele. But on that note, I mean, do you expect wind power growth to continue in the region? Because it's not always, there's been a lot of protests, and there's a big anti-wind movement developing in certainly in Norway. Do you think that could put the brakes on future wind park development?
Yeah, we have seen that you are extremely right, and even the most important projects are continuing at good pace, both in Norway and in Sweden. Obviously now, for financing new projects, these low prices, as Olav said, they don't help. But if the new interconnectors to Germany, to GB, and in general to the external markets, they continue to go on, it will continue to make sense to invest in wind project in the Nordics. So I don't think that will stop. Probably will slow down. A lot of sources are saying that it will slow down a bit for this year and maybe for next year as well. But there is no long-term reasons for this to stop. Yeah.
Absolutely. I mean, we have a question here about the slide that you showed, the wind impact. Was it for Norway or for aggregated Nord Pool?
That's a system price. That was system price. So spot deltas day on day. So for example, our 15 today minus our 15 yesterday. I mean, mostly weekdays against the wind delta day on day. So yes. So was data for a system price, only taking Q1 now versus Q1 16.
And Nathalie, I think there's a question here related to, if I can I'll just try and find it, about the, let me just see it here, what is the climatological norm that the TERSAL refers to? Is it 30-year norm or a 10-year norm, or is it different? Could you say something about that? I can't hear you.
Thanks. So the seasonal forecast is 25 years. It's from 1993 to 2017. And for the subseasonal, it's with respect to 20 years of data.
Okay, thank you. And
for the seasonal.
Okay, and the weather forecasts at S2S4E, are they recalibrated or post-processed, with regard to reliability, or are they sort of raw outputs from the SEASS model?
Yeah, it's not the weather forecast that you can see for the next 4 weeks. It's the subseasonal forecast system.
Sorry, just to clarify, it was climate forecast, not weather forecast. Sorry.
Yeah. There is a lot of information on the DST. You can click on it and you can find all the post-processing that has been done and how the quality control is done. There is also some bias adjustments. Yeah, I'm not an expert on that, but it's all explained on the DST what has been done.
Okay, excellent. And what in terms of, if I'm sticking to the reliability and looking at the variables here, is there a difference between where can you be more reliable? Is it more reliable to forecast temperatures rather than wind, or sun versus rainfall? Which would you say are more reliable? I mean, this is coming from someone who has very little background in climate forecasts, or weather forecasts even. So.
Yeah, so the reliability is calculated by a statistical measure for each individual variable. So you can, it's calculated in the same way, but I think the question is more about which variable is easier to forecast.
That's the one,
yeah, definitely temperature is easier than precipitation or wind, for example.
Okay, thank you very much. Are there any other questions? There don't seem to be very many questions, and I think if I can just ask you finally, Gabriele, about the forecast for demand. It was at 11%. That was quite bullish. Could you kind of explain that a bit more?
Absolutely. So the reason why it was originally set to that high level is that we looked back at how it was during the financial crisis. So expecting a similar GDP impact to the one 2008, 2009, we saw that at that time that was the effect on the demand. So it was quite massive. So now actually the live data, as I said, are showing a much lower impact, even if it's still building up. So it's not slowing down as in other countries, but is still slightly growing. So, but we are around 5% at the moment for the Nordics, especially Norway and Sweden, which are the countries which has the largest consumption in the Nordics. So as I said, I was trying to be very honest. For us, setting up that to 11% was also a way to in a way counteract some other non-bullish factors that we have in our model now, that we are trying to improve and to work continuously on that. But basically we have exchanges in our model which are a bit too bullish, and some snow reservoir level which are not exactly in par with what other sources and NVE have. So in a way, for us, it's known that this is also a way to counteract other bullish factors, but I totally agree that 11% is probably too bearish and a bit too unrealistic. So for these reasons, we publish both in our icon tool and in our analysis always a scenario run where we reduce only 5%, as it seems more natural. And then if we go in that direction, we are bullish for Q3 essentially. So we were bullish for Q3 on last Thursday. So yes.
Okay, well, I think that's about all we've got time for today. So I think I'd like to thank all the presenters, Jana, Nathalie, and Gabriele, and I'd like to thank the organizers for inviting me. So thank you all, and goodbye.
Thank you.
Thank you. Bye.